I'm not against financial transaction taxes. There is a financial transaction tax in Britain. We have a transaction tax on share trading, on equities. And if we could agree a financial transaction tax globally, that would be a good thing. But that's not going to happen. And I'm also in favour, by the way, of countries meeting their aid commitments. And the UK, even at a time of austerity, is increasing its aid budget and will meet its 0.7% of gross national income spent on aid in the next couple of years. So I'm certainly in favour of that. What I find difficult to accept is that we are going to spend a huge amount of time discussing, at the middle of what is in effect a crisis in the European economy, the idea of a financial transaction tax, which is already clear from the speakers who have spoken, both Eurozone as well as non-Eurozone, that there is not anything like unanimity for. So I think we have to ask ourselves whether this is really the best use of our time today. But since we are discussing it, let me make these points. First of all, the Commission itself points out that a European financial transaction tax would have a serious impact on European growth. It would hit the UK economies. It could reduce European GDP by up to 3.5%, but the Commission take the central view it's only going to reduce European GDP by 1.76%. That's their central estimate. That is going to cost 500,000 jobs across the European continent. Those aren't my figures, those are the European Commission's figures. So we have just spent the whole of the rest of the morning talking about how we can get the European economy going, how we can create jobs, how we can make sure we're not priced out of the global economy, and then we have a discussion about a proposal that the Commission itself says is going to reduce growth and cost jobs. The Commission also estimates that 70 to 90% of all business, all transactions, will leave the European continent as a result. So here we are, we're talking about something that is going to push a major global business out of the European continent. And if we're serious about Europe, the whole EU, the European continent, being a place which competes in the world, where businesses come and do business, where jobs are created, we are discussing something that is going to push 70 to 90% of a business elsewhere around the world. And the idea, by the way, that the United States or China or let alone Singapore, are going to contemplate this in my lifetime, I think is fanciful, frankly. Third point I want to make is we have to be realistic about and truthful to our publics about who pays this tax. There is not a single banker in the world who is going to pay this tax. There are no banks that are going to pay this tax. The people who pay this tax are pensioners who have pensions, and they have to pay this tax. They are taxpayers through their governments because they have to raise money through sovereign debt auctions. This is not a tax that is paid by bankers and banks. I'm all in favour of taxes that are paid by bankers and banks. That's why I've introduced a bank levy in the United Kingdom paid for by banks and their shareholders. But a financial transaction tax is paid by the end beneficiaries of financial transactions, and that is pensioners. So if we want to go and introduce a big tax that is going to affect all pensioners in Europe and pension funds, go ahead. But that is, let's at least be honest about who pays this tax. And the final point I want to make is that we are not being honest either about the revenue that is supposed to come from this tax, even if all the business didn't leave the European continent and we could actually collect this tax. This money has been spent 4 times over by the people around this table. It is supposed to be spent on contributing to the European Union budget, which is the European Commission's proposal. It is supposed to be helping national governments meet the hole in their public finances. That's the second use of it. The third use of it, which has led to the campaigns by all these different pressure groups, is to spend the money on the aid commitments that some countries around this table have not delivered on. And the fourth idea, which hasn't yet been mentioned but is part of the campaign, is that it should be spent on climate change commitments. So the same money is spent 4 times over. And I suspect, maybe I shouldn't be so cynical. I suspect some countries, because they're not meeting their international aid commitments, like to create a bit of ambiguity about exactly where this money is supposed to go. So I would suggest that we put to rest the idea that there is going to be some European financial transaction tax. I note that this is not an issue of the 17 versus the 27 or the 17 versus the 10, because already we've had 4, by my count, Eurozone countries who've said they have real concerns about this idea or they're against it, and we haven't heard everyone else around this table. This is not about the Eurozone or the 10 versus the 17. That is a red herring. I suggest we just put this idea to bed. There is nothing close to unanimity in this Council about it. We should get on with, yes, by all means, taxing the financial sector, and I would recommend a bank levy like we've introduced in Britain. Let's get on with meeting our international aid commitments, and the United Kingdom is doing that. And let's get on and discuss the things that are really going to help the European economy grow and going to create jobs for the people we represent.